SoFi, resilient despite challenges, anticipates growth with positive guidance, potential short squeezes, and forthcoming profitability, defying market expectations with confidence. Welcome to Stock Analysis, your go-to destination for insightful market analysis and investment strategies. If you're ready to navigate the world of stocks with confidence, don't forget to hit that subscribe button. Today I will provide you with some information about SoFi stock, and I am telling you now that the valuation of SoFi cannot be a matter applicable to retail investors in the market. Friends, we've suffered a lot in the past 30 days, poor ratings, bad headlines, negative sentiment in the market. Everything seems to be creating a bad anticipation for SoFi. Tesla has also experienced exactly the same priced action in the past 30 days or so, just continuous losses. They had the opportunity to prove everyone wrong with their earnings report and just soar. And what did they do? They stumbled and lost it. They didn't even provide guidance for 2024. If you're not giving guidance for your 2024, then your business isn't in the best shape for the next 12 months, because you're not that confident in projecting your numbers. Tesla stock suffered losses up to 13% or so. SoFi will likely exceed the expectations of analysts for 2024 to a large extent, according to my estimation. I'm talking about revenue ranging from $200 to $300 million plus. Earnings before interest, taxes, depreciation, and amortization in the hundreds of millions will be added. I'm telling you, friends, the price action seems ugly, and it truly is. But it's preparing you for a fantastic opportunity to invest at levels that could be beneficial for SoFi growth potential in the coming quarters. Friends, I'm not talking about 3 to 5 years. I'm talking about now. SoFi is in exactly the same environment as every other company. A super high rate, higher environment, friends. And guess what they're doing? They're breaking records every single quarter. Imagine what will happen on the first rate cut. We'll see refinancing in every lending segment. There will be an increase in the stock market. There will be growth in their financial services. Everything is heading in the right direction. Friends, this is a fantastic opportunity for SoFi. What are your expectations for Monday? Friends, I'm very excited. This is bullish news, friends. The U.S. economy has grown at a pace of 3.3% in the fourth quarter. Expectations were indeed higher. I think their expectations were close to 2%. So in Q4, where SoFi report is due, and just one more trading day, Monday morning. This is the quarter, friends, where the overall U.S. economy saw good growth. Friends, this is very bullish. And people are watching SoFi numbers, the guidance they've given for Q4. And you can go and see people like Tanner, who have been following SoFi stock for years. And they don't understand how SoFi is bringing about margin expansion on earnings before interest, taxes, depreciation, and amortization. They don't see it yet. And I can't blame them, because something is about to change. SoFi is about to reach an inflection point it has never reached before. We don't know where this will come from. We don't know if it's coming from student loans or not. We don't know if Galileo is about to take off. We don't know if they've fully invested in personality. Again, we don't know. All we know is that they have so many different businesses in their portfolio. Now, when they look to the future, they can use AI, they can automate their debts, and they can also ensure that they acquire the best kind of users and make profits beforehand. Friends, I believe SoFi is going to provide an intense guidance for 2024, and the world will be astonished. This year, you will see more than hundreds of articles. SoFi is making profits. SoFi is guiding a whole year, making profits. These will be the magical words that will eventually transform this stock. Let's move forward, friends. It's truly something great that we have brought today. Once again, friends, I want you to look at Tesla monthly chart. This is the time when they recorded profits. The stock was only down about 19%. And they messed up the bag because they didn't provide guidance for 2024 due to the high interest rates. They were having trouble navigating the company future direction. Despite being such a large company, in such moments, you can't manage those people. I can do it with SoFi, I can understand SoFi, and I can show record growth in every quarter because we are still small, we are still growing. But friends, they messed up the bag. And check it daily. The daily value has dropped by 13%. I'm telling you right now, these stocks were set exactly like this. They were leading out between 20 to 25% at the time of earnings, and Tesla fumbled. And I don't think SoFi will fumble. I think the management is on point, guys. They have massive incentives to earn bonuses. SoFi management will receive huge bonuses of $25, $35, and $45 by 2026. So they have about 2 years to achieve those numbers. If SoFi makes some significant profits in Q4, they'll hit $190. But I wanted to break down these numbers for you guys so that you can see that bare fantasies on PE, price-to-earnings ratio, don't affect profit examples. For Q4, you just have to multiply net income profit by 4. That will give you the PE for 2024, and there's no further growth. Meaning if their PE remains the same for the next 4 quarters. So for 2024, if we get a profit of $10 million, then they were right. Their saying was right, 182. We sold off a bit for a while. But if we get a profit of $20 million, see how the numbers change rapidly, 91x PE. I'm a bit more bullish than that. I said we can make it 30. Look, it's coming down. 30 million profit, 60x. And if SoFi wants to do a lot more and wants to reach 40 to 50 million, which I don't know how that'll do, maybe they'll surpass the earnings before interest, taxes, depreciation, and amortization, expectations of $15 million, and reach 40 to 50 million. But you can see the PE, guys, 45x, 36x, meaning compared to high-growth tech stocks currently in the market. Nvidia is trading at around 90, Tesla at around 60. It means we got a good valuation now. Even if we can't increase profits further, if we achieve these numbers. So guys, the market is wrong. I'm telling you right now that in the next 10 years, the fastest growing bank will be in America because there's a digital shift happening, and people are realizing that banks are making fools out of them. They're making fools out of them with fees. They're making fools out of them with interest. They only care about dividends and share buybacks. And stocks don't matter either. Their earnings drop significantly, and stocks don't matter either. They only drop 1%. They bounce back the next day. These are dividend payouts for old investors. It's just an opportunity for the rich to cash out. Old banks don't care about any customer. SoFi cares about them and is rewarding their customers, by giving them significant interest because SoFi itself isn't taking that interest. They're giving it back to their customers and rewarding them. People were a bit upset about Tesla. Yes, okay. Tesla, different sector. Let's compare revenue growth in the banking sector with Q4. I understand these companies are huge. They've been around for 100 years. But listen, your growth is useless. Done. And there's a digital shift happening. So you're losing customers. Okay. Let's see. The digital shift that's happening. This is revenue growth. Q4, guys, very simple. SoFi estimates 33%. We have the number 1 bank, JP Morgan, with 11% growth. A very big company, I understand. Wells Fargo hanging by a thread at plus 2%. Morgan Stanley hanging by a thread at plus 2%. Big things going wrong in Bank of America, 11%. You can go and see what's happening with old banks. They can't survive in this high interest rate environment. They can't. They're too big, and they can't handle the macro. SoFi is handling it very easily. Imagine when we flip the switch. Imagine when we flip the switch. SoFi can have over 40% growth. It's entirely possible in the next 3 years, and in a lower interest rate environment. Friends, I am extremely excited. You are witnessing what is happening. Friends, there is a wrong narrative going on about SoFi. And we have many analysts covering this stock. Like 6 legacy banks are covering SoFi and giving us price targets ranging from $8 to $10. How does this make sense? To give a fair price target to banks, you need the best possible number in the world. I think we will surpass these price targets, and they will have to raise their price targets because overall market, there are investors. Institutional investors are seeing a growth story that is leading to big profits and growing rapidly. All right, friends, we have the number 1 analyst coming for SoFi. 5-star analyst Jefferies John Heck, guys. This guy is ranked in the top 300 among 8,600 Wall Street analysts. And as you can see, he's not actually a legacy bank competitor for SoFi. And look at the price chart. Does this make sense to you? He's not a legacy bank analyst. And look, he's giving us the highest price targets, guys. A $15 price target was reiterated last night. Guys, there's a 98% upside for SoFi. There are 18 analysts covering this bad boy. I think at this time, they have the highest price targets. And look, they are also covering other fintechs. I want you guys to see, for a firm, they have a 6% upside. Remember, a firm had reached up to 300%. They think, according to the current situation, this is fair value. They have Upstart. They think there's a 10% downside. They are covering the fintech market, not just SoFi. And they think that SoFi has the most upside at this time, a double from here, $15, guys. They are reiterating this again before earnings. Why do you think I have a $30 price target for this stock in the next 11 months, when we will achieve profitability in the next 5 quarters. And you are watching. The stock is being dragged down now. The stock should have been at $15 now. And then my $30 price target seems more realistic. We'd have shorts against the company. But what I'm saying now is priced action cannot be the best bullish for a retail investor. It's just selling, for the past 3 weeks, 4 weeks, and you can see the price action of SoFi stock right now. We just seen it go up again for about 20 days. It's pumped up again in pre-market to 2.78. Sold off flat 0.5%. I mean, they're just shaking people. Look, whoever took it to zero break even is just shaking people. They're shaking every last weak hand as much as they can. Okay. They want to take all the money out of the hands of retail investors. Shake everyone so that some institutional investors can get a place. Friends, I'm telling you I have a lot of hope on the priced action right now. I think you might see a little pump tomorrow because shorts will have to cover a little. I really don't think they're covering. I mean, if they have a full 100% position, they might cover 10% tomorrow. They don't care. They're completely against SoFi. I mean, when you see such earnings from banks, why wouldn't you go against SoFi? Every company is failing. You might feel something different about SoFi, something different from 99% of people. They don't listen to every single earnings call like we do and listen to the management team. They just don't. We actually listen to the management team and trust them because they're meeting every single earnings expectation. The only difference is that this will be a profitable quarter. And we're going to get the 2024 guidance phrase, friends, everything looks bullish. We just need to blow SoFi out of the water, and all these shorts will be wrong. And there's an opportunity for some pressure there, some short squeezing. When I talk about short squeezing, I'm talking about, maybe up to 30, perhaps 40%. This is perhaps the biggest move I've seen. Okay, it will take us to heights that are not that high because we've sold so much. But we'll come back, to $10, $11. That's the correct level we're seeing if we get such a big move. Thanks for joining Stock Analysis. Stay informed with our market insights. Hit subscribe for expert strategies, and let's navigate the stock world together. Happy investing.